Hi guys, okay, so it's the last week in March and I'm desperate to meet my month's targets. I've had a good month, but obviously I want to meet my month's target. But the one thing you shouldn't do is go tracing trades. You can't force the market, you ought to be patient, and that's something I've learned this week. Having said that, it's still been a good week. So primarily I've been trading variation London breakout strategy. So just simply here, I'm trading my favorite pair, Euro USD. And this is a chart of the Euro USD. We've got 5-minute candlesticks charts. The box there, as it says, is the Asian session from midnight to 8 o'clock UK time. And what I've done is I've adapted it. So normally you trade long or short at 8 o'clock once it breaks out. But I've got two moving averages. I've got the blue and the red. The blue is a 6 moving average. Red is 21. When the 6 goes above the 21, you'd buy. When it goes below, you'd sell. Also got the MACD at the bottom of the screen, which is similar. So I'll just get my highlighter pen. I normally do my charts on IG, so just getting used to TradingView. But basically, as you can see here, this was at 6:05 in the morning. I wasn't actually trading then, but the blue line's gone below the red, 6 below the 21, so you'd sell there. Well, I didn't sell until here, and I sold there because after the big candlestick, it basically broke through. And I set a limit order. I think it's for about 15 pips, and I took, 13 pips just at the bottom here, so it's more or less the perfect trade. I couldn't have got much more. Okay, it went down slightly more there, but so that was a really good trade. And I got in at 8.10, got at 8.20, and that was £100. So that was a really good start to the week. Tuesday was just a small trade. Yeah, again, I've highlighted the Asian session. And you see here, if I just get the highlighter pen, even though it's broken out the box here, it's 11 o'clock in the morning. It's a little bit late, probably actually 11:40. Probably give it up to 11, but any time after that, I don't really like to trade it. Certainly not London breakout anyway. I could obviously trade it via the moving averages or the MACD. And then Wednesday, I got my second best trade of the week. A big range of 38 pips here. Now what I did here is, you see there, it's just come up here. After this, in the Asian session, it's been going down big time, and then it's just come up here. Same with the MACD at the bottom of the screen, you can see there. So when it broke past the wicks here, I got in here, and I set it for 10 pips, and it literally just made the 10 pips here. And that's the thing about not being greedy. And as you'll see, as I'll show you in a second, being greedy has its problems. And Thursday, if I remember rightly, yes, Thursday was a small winner, so we won't worry about that. And then it's Friday where really problems came unstuck. I guess I was desperate to meet my month's target, only falling just short of it, but I was desperate to meet it. And so I started pushing trades forward to the market, which you can't do. Now basically on Friday, because I'm trading the euro, if we go to Forex Factory, there was, you see here, the red box there on Friday. This figure here wasn't there on Friday. But basically it's a German preliminary CPI. Now normally you'd have like a set time when it's going to come out, but this was all day because it comes from 6 German states. They do the reports of, as it says there, change in price of goods and services, and it comes out during the day, so it could come out any time. And as the red box is high impact, I panicked, and I specifically panicked where, if I get my highlighter here, I got in just about here, and then there's this big candlestick here that's gone up, and that was just before London Open. So when it, and of course I was watching it, which is the wrong thing to do, so when it went up and down, I panicked and I closed out for break even. But as you see, it went up, and you know the moving average is still above, the blue is still above the red. So if I just held it out here, I would have got my 10 pips. Then it obviously it came down, and then you would have closed it out anyway. And then obviously it does go continue up then anyway. But you know, I'm only looking for 10 pips, and I would have got that. So foolishly, what I did, because I was desperate for a trade, I thought I'd go over to the other pair, which I don't tend to trade so much, and I've had pretty bad results before with it. So I don't know why I did it, but as I say, I was desperate. I went over to the pound US, and this is on the Friday here. Get the highlighter pen out, and I actually went in. I think I went up somewhere here. Just let me check. 7:55. No, 8:35. I went in at. I think it was about here. So I went in about here. Just let me get the highlighter again. So I went in just about here, and as you can see here, obviously it's already been going up a while, but I thought it was going to continue out the box, and of course it didn't. I would have got 7 pips if I closed off up here, but then it came back down when the moving average crossed. I closed out here, so that wasn't a very good idea. If I'd just been obviously satisfied, oh, there we go again. Just getting used to this. Just remove that. If I'd been satisfied with the 7 pips, you know, it's better to have a winning trade than a loss. But I thought it was going to carry on outside the box, which of course it didn't. We'll go back to the Euro US. So what I did with the Euro US, I actually did, which in my earlier videos I've never actually advised this because you do get a lot of noise, but I was going via the moving averages. I actually did a bit of scalping. I was very careful though, especially on Friday afternoon when the markets do tend to slow down. But as I say, it's the end of the month, and I guess I was getting a bit desperate, which that's where the emotions come in with trading, and sometimes it's very difficult to control. But I wasn't just, you know, going in with a gambling attitude. I was actually going in there using the moving averages. So I think if we look at the Euro US, I think we're on the 1 minute chart. I think where we was about 325. It was here, so I can just show you with the box. Basically, it was this section here. So I was literally just get the highlighter. So I'm still getting used to this. Just get the highlighter. It was literally up and down, just getting a few pips there, and that's all I was doing. And I just got a few pips, but you know I was just using the moving average for that. So that was that. And then if we go to, there we go, on a small account. So 6 out of 9 trades closed at profit, 67% strike rate, which is pretty good. Obviously it would have been more, but I did some trades that, you know, I shouldn't have done because I was chasing my targets, which is one thing you shouldn't do. 1.26 profit loss ratio, that could be better. Obviously 1 to 2 would be better, but you know, strike rate's not bad. So yeah, not been a bad week. So we'll see what happens at the start of this month in March. We're already into March already, so we'll see what happens. Spring is on its way, and yeah, it's been a good month. Didn't quite hit my target, but close enough. It would have been even better. So the moral of the story, as I say, is you can't force the market. Don't chase trades. Patience is a virtue when it comes to trading. Anyway, I'm happy with the month, so yeah, it's not been a bad month. I'll see you on the next one. Cheers, guys.